Hello and welcome to our weekly look ahead at the markets here. And just to recap what's been going on in the last few sessions, we saw that lower than expected inflation print out of the US, really setting the cat amongst the pigeons. As far as markets have gone, we've seen volatility in fixed income. We saw bond yields retreat quite sharply in the wake of that inflation report, suggesting perhaps that the Fed doesn't need to do that much more. We wait to see whether or not that is the case, of course, but the market has dialed back expectations for the amount that the Fed hikes from here and has brought in expectations for when it starts to cut interest rates. I saw dollar tumble, fresh year-to-date lows for a dollar index. We saw the S&P 500 and the Nasdaq making their best finishes since April 2022. And we also saw oil start to break out of that falling wedge pattern, and that started to gain some momentum. So looking ahead to this week, we get more from the global economy. First up, China. We get industrial output, retail sales numbers. Retail sales growth cooled to 12.7% last time out. Industrial output growth cooled to 3.5%. So looking to see just how much waning demand there is in terms of the global economy, in terms of the domestic demand in China, and what that means for financial markets. That trade data from China that we had the other day, that was also weaker than expected. Exports not doing as well as hoped for. There's the Empire State Manufacturing Index as well. That's out on Monday along with those Chinese reports. And then into later in the week, we're going to get US retail sales numbers, and they're going to be important. They've held up not too bad, but we'll look to see whether or not the US consumer is starting to show signs of weakness. Many suggesting that the US consumer is down to its last $500 billion in stimulus money from the pandemic, and that's going to burn out over the course of the rest of the year. So perhaps not quite seeing any cracks just yet. So those retail sales numbers will be important. We also start to get some flavour for consumer inflation from J&J. We saw big price-led growth for some of these fast-moving consumer goods companies a quarter ago. 10% plus inflation. Volume not so hot. So looking to see what that J&J number suggests for some of the others in the class, like Procter & Gamble, for instance. There's also earnings out from Tesla, record 466,000 plus deliveries in the quarter. So looking to see whether or not that translates into better profit margin growth. Of course, price cuts being the main driver of that growth number in terms of deliveries. Also getting numbers from Netflix, looking to see how their paid ad-supported subscription service is going. It's maybe been doing a little bit better than many had thought. We are also going to be looking at UK inflation numbers coming out Wednesday. They're going to be important for the Bank of England. We saw that core reading jump to 7.1% last time out. So whether or not that core number starts to come down, as it has in the US and elsewhere, that will be key to Bank of England expectations and markets pricing in 50 basis points in August. And potentially a few more hikes thereafter. Whether or not the Bank of England can continue to hike, if the Fed is starting to look to dial it back, then we're not sure about that, whether or not that's going to be feasible. But certainly 50 basis points in August looks like a certainty. And whether or not that inflation number moves the needle in terms of expectations beyond August, we'll wait and see how that one plays out. But those are the key events coming up in the weekend. Thanks for watching.